Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today, our guest is Armando Gonzalez. Armando is a technology entrepreneur and the CEO and co-founder of RavenPack, which is one of the biggest data analytics for financial institutions firm anywhere. His role at RavenPack is to oversee the product design and engineering of the company's data products and analytical tools, which is right up most of the CFA New York's members' alleys here. He speaks around a lot. He spoke at our event this winter, and he got his degree from the American University in Paris in economics and international business administration. So thank you for being on the podcast, Armando.
Rob, it's a pleasure.
So one of the things that's been everywhere, and you talked about this a little bit from the podium, is ChatGPT. It has amazing staying power in the press. I know you have used it or experimented with it a little bit to analyze financial data and found that some of the separating the signal from the noise is difficult with ChatGPT. So let's start there. What did you find out about it?
Right. I mean, ChatGPT is an amazing product, right? It's a very general application as well of large language models, and I think specifically for finance, right? What we're seeing is that it performs in a fairly average way, right? I mean, it has the ability to know a lot about business aspects and fundamentals, but given the nature of the technology, right, in that it's designed to just make predictions of the next word or the next sentence, there's no guarantee, right, that the analysis itself will be based purely on factual information. And there's also ambiguity and perhaps just lack of transparency around the sources that were used to train it, as well as the availability of the information, the timeliness of the information, the veracity. So those tend to be, in my books, just major red flags, right? In terms of trusting a third-party tool to perform financial analysis, which requires significant diligence, right? Requires an audit trail, requires transparency, and sources matter, right? So without that, I think without that level of comfort, right, it makes it very difficult to use in a sort of high performing professional environment. Whereas in a more perhaps amateur way, right, or if you wish to get just generative brainstorming, then it's a fantastic tool.
Yeah, it's a great way to surf the internet quickly.
Sure, and get just kind of broad strokes, right, and potentially correct, right, but at least they're just broad concepts and broad ideas, especially when it comes to like equity research, right? I guess the hallmark of equity research is relying on an analyst to perform a very deep dive and expert understanding of a company or of a specific market to either prove or disprove a thesis, right? And so you rely on that individual to perform that level of analysis and gain trust and comfort that analysis was comprehensive. And I don't think we're getting that right from ChatGPT. As in, you don't leave a session or a chat with that sense of confidence.
Right. I was thinking about this in terms of, before this recording, in terms of my experience at a bond rating agency and about how we treated databases, new databases. There were a lot of new ones coming online when I was there that were around commercial real estate,
right,
including analysis of parking lots, usage, et cetera. And how long it was going to take us to actually do that type of analysis. It wasn't the clap your hands and 4 weeks later, ChatGPT will make you a milkshake.
Right.
So I was thinking this is going to take a while. In preparation for all of our podcasts, I do a lot of reading, and I really enjoyed the portion of your website called Insights. You all do a very good job of explaining to people like me who did cut my teeth as an analyst, not as a data analyst, and bring it together in a way that is exceptional. So I just wanted to, first of all, say congratulations on that, because it ain't easy.
Oh, thank you.
It also brought up something I think a lot of people are struggling with right now, which is asset allocation rebalancing and sector rotating. And there is an interesting piece there on using your company's tools to make better decisions about that. Could you explain how this type of decision making is augmented with those tools?
Absolutely. So first of all, when it comes to our insights team, I think we're quite proud of our data science background, right? And in that everything that we've done from inception, and Node Ravenpack's been in business for 20 years. In fact, we're celebrating our 20th anniversary next month. And one of the key things that we found, and perhaps it was thanks to the amazing customer base that we've developed, our earlier clients were the best performing quant funds. And they had, from the start, they had a 100% data-driven investment thesis, right? And in learning how they thought about the world and creating multi-factor models, and more importantly, they were embarking on the transition from sort of a pure fundamental kind of technical based trading or investing thesis to an alternative kind of perspective where, in our case, news analytics, which was our first product, right, was the first alternative input into a model where you're analyzing the effects of news on publicly tradable securities like stocks, and we learned from them that it was important to perform serious data science and back testing of not just the underlying signals that one could generate from news, but also how they behaved in the context of other signals that may be capturing similar or, ideally, that you're adding an orthogonal component, right, to the model, right? And as a result of that, it forced us as a company, and rightly so, to develop our own data science expertise. So we've got over 24 people that act as internal customers of the data products that we produce. And that is why you see some significant work on thought leadership pieces, trying to demonstrate how this data should be incorporated or could be incorporated in a variety of different models. And one of the areas in particular that, as you mentioned, caught your attention is the use of our data for stock selection, but more specifically for sector selection, right? And if you're able to take a more bottoms-up approach where you leverage language AI, like the one we've built, to determine what the sentiment or the prevailing sentiment is on any given company, and then you roll that up to the sort of underlying sectors, and then you start to overweight sectors that are experiencing a more positive sentiment and underweight those sectors that are aggregating or accumulating negative sentiment. That sentiment could be coming from, layoffs or any executive changes, governance issues. It could be product related, could be market related. But effectively, if you're able to quantify the sentiments on all of these underlying elements and then roll them up to sectors, you can become more effective at being long or exposed to those that are experiencing the most favorable sentiment scenarios. And there's been several situations where this particular strategy has been very effective. We have an index product created with a partner bank where they've effectively managed to outperform the S&P 500 for the last 10, 15 years by more than 50% as a result of just adding sentiment to the mix, right? And this has proven to be a very powerful way of not only rebalancing with more kind of recent and timely information, but it's a strategy that has worked in the past and continues to work even out of sample. This particular product has over $2 billion in assets under management. And it continues to perform extremely well in its more than 3-year out of sample period.
Right. I think this is exceptionally interesting to think about because if you look at the market environment over that time frame, because a lot of the macroeconomic factors, a lot of the performance was sort of collapsed into this range.
Exactly.
Which means that active management doesn't perform very well compared to passive investments.
Mm-hmm.
Right. So, but this one did. So there's this is always the question: if passive management beats 90% or 85%, call it whatever it is, I know it's been studied a couple different ways, of the active managers, the question then comes: how do I find the other ones? And and I think that got left out of the discussion a lot of the time. But I do think it's really important for people to listen to this podcast to take a look at that because it does knock a couple of things that you might have taken for granted on their heads.
Absolutely, and as most of the research and the effort has gone into equities, right? When it comes to using alternative data sources, because it's fair, right? There's more data on companies and products and consumer behavior. But more recently, I would say in the last 3 years, obviously, as a result of the market conditions that we're in, we're getting significant traction from credit markets, right? And just, across fixed income and commodities, currencies, there's exceptional demand now for alternative data use and AI use. And these particular investors are becoming more and more data-driven and more process-driven, right? They're applying quantitative techniques that have been exclusively used in equities forever, and now they're becoming multi-asset class.
Yeah, and I think that is also symptomatic of one of the things that I think makes a lot of people interested in rebalancing right now is the incremental rise in risk of fixed income assets due to the macroeconomic stuff that's going on.
Exactly.
Yeah, it's definitely a good time, and this is part of the reason I wanted to dig into that a little bit, because a lot of people are thinking about that right now. The other thing that I was curious about, there's been a lot of growth in fintech firms. There's been substantial, in fact, some pretty attractive pay packages that have gone up at fintech firms. And a lot of our content here at CFA New York is aimed at helping people in the financial services industry to anticipate and develop the skills that they will need in the future.
Yes.
So if you were talking to, a CFA person who maybe has some exposure at their firm to alternative data, thinks it's the way to go, what should they? Let's say they got a CFA and an MBA, but long enough ago that they forgot most of it. How would you advise them from an educational perspective?
Right. Well, what's interesting is that we actually have a data source that gives us access to job postings. Right. So in partnership with the company called LinkUp, we have access to over 20,000 employers that are. So what they've done is they've basically built a way to capture all the new job postings that are made available. And these job postings are then fed to RavenPack, and we run them through our language AI system to identify both what jobs are being offered, specifically what roles are being offered by companies, the location, but also the skills and benefits, responsibilities, et cetera. And we're able to create this massive data set that contains all of the various requirements that employers are having. And it's a great source to identify new skills, right? That are being sought after. And there was something very interesting that applies to our space where we saw more than 50% increase in demand for natural language processing skills.
Okay. Yeah.
And this is arguably before the sort of ChatGPT frenzy that we're experiencing. We had already seen that start to grow back in 2020, 2021. And 2022 had kind of its peak, and now when we look at the data, it's growing exponentially, right? Mm-hmm. So there's a significant need and obviously demand for finance domain or domain-specific experts that have natural language and AI capabilities, whether they've done work themselves in developing large language models, or whether they've worked with machine learning techniques in the past, but applied specifically to finance. And I think those are going to be must-haves, right? At every level of sophistication, right? Whether you're the engineer that is capable of training your own model, or on ML ops, right? That you're capable of deploying models, right? Those combined with the more traditional factors, right? And traditional techniques will be the secret sauce that everyone will be looking for. So having those skill sets are, I think, a major plus.
Yeah, I wonder also, and I've thought this, I was thinking about this during your presentation at CFA New York. I wonder if there isn't also a rather large gold mine for people who have relationships with clients and being able to explain what's going on to get to that level of comfort you made reference to earlier.
Absolutely.
Because the clients also have to get comfortable with this. It's not just the analysts. I wonder if being able to explain this is another art form.
Indeed. I mean, given that these particular technologies are, first of all, complex, but also relatively new, right? Mm-hmm. And it's an evolving space, and it's changing so rapidly, right? That if you have someone that is capable of dissecting what's really going on and what are the what are the techniques or the service providers or the data sources, which models are really performing, like that level of comfort and being able to both advocate and explain to more traditional investors, I think will be a job profile on its own, right?
Mm-hmm. Mm-hmm.
We saw the same level of success with this particular index that was constructed with our data, where the end customers were insurance companies. And these insurance companies don't necessarily have any technical expertise. They simply look at return profiles and get comfortable with the types of performance ranges that you get from a product that is based off the S&P 500, right?
Mm-hmm.
But the bottom line is that if you have someone that is capable of really, making these concepts more transparent, right, and also being more anti-black box.
Yep. Yep.
I think that in itself will be a major opportunity for anybody in this industry, because most investors are traditional, right? Most capital comes from a much more simplistic view and a more traditional finance view. But it's inevitable that these new technologies and techniques and more data-driven modeling and systematic processing will certainly dominate the space in the next 5-10 years. And we need to be capable of explaining it to investors in a way that makes them comfortable.
Yep. Great. All right. Well, so folks, you heard it here first. NLP is the way to the future. So, Armando, thank you for sharing your thoughts with us.
Yeah, it's my pleasure, Rob. Thanks again for having me.